Yay!
Ready?
We're ready. All right, how's it going, everybody? I am here with Joseph Smith, who runs Traveltax, and I'm going to be doing kind of like an interview session with him, asking the most frequently asked questions, breaking down tax homes, and just our tax rules in general, and then also asking him the questions you guys put on my comments yesterday. So exciting to be here. This is actually in the Traveltax office.
Yeah.
And so we'll be talking to you. We'll also be looking at this camera when we're answering, because that's the one we'll be using later. So you guys feel free to say hello and ask us questions. And but getting started, Joseph, why don't you tell, and you'll probably have to talk a little bit loud to get it there, but how did you start Traveltax? Like, where did that all start? What was the inspiration with that?
Oh, wow. That was a long time ago. I'm starting to date myself, and I'll tell you, I used to travel in the early 90s.
Nice.
Some of my clients haven't even been born by then. But when I finished college, I was a double major in accounting and respiratory therapy.
Mm-hmm.
And I was engaged and asked my wife, what do you want to do? I had the option of working with a healthcare consulting group in North Carolina. Remember, I grew up in South Carolina, so here we are, upstate South Carolina, with all this going on in 1989.
Yeah.
And I said, or we can do this thing called traveling. And I had been looking at the literature and becoming a travel therapist, because I was a respiratory therapist. And my wife said, well, that's pretty easy, let's go hit the road. So
nice.
we traveled for 3 years, and I'll never, ever, ever trade those years for anything else. Made a huge difference in our lives. But when we were traveling, the first tax season that we went through, I had a couple of coworkers come up to me and hand me these manila folders. And I said, what's this? Well, you have an accounting degree, right? Yeah, so here are taxes. Please, can you do this? We'll pay you whatever.
This is awesome. I've never heard this story. This
sort
is
of an
awesome.
open-ended invoice, you know. And I was like, okay, this can be a nice hobby. Because I already had a difficult tax return of my own. I had 3 states and rental property, and when it starts getting complex, the more you add to your life. So I did a couple of those, and that was 1990, or 91, 92. A couple of them had told somebody else. So it sort of started there.
Nice.
And it was just a winter hobby until we moved out here 16 years ago. And there was an old journal called Healthcare Traveler.
Okay.
A lot of people probably don't remember it. It was one of those publications that you can get for free because you're a healthcare professional. Most of them have lots of job ads and that sort of thing.
Yeah.
But in that publication, there were a number of tax questions, and people asking questions and answers being given, and I wasn't very happy with what I was seeing.
Yeah.
So I started writing for them. And next thing you know, we have a few more clients. But that was 2001, but by 2002, we decided to go ahead and take everything national. And it's amazing how long it's been. Well, we took everything national about 2002, went from a couple of hundred clients to where we are today, and added a few other services along the way. But that's really how it all got started.
That's
it was
so
somebody
cool.
handing me an envelope.
Saying, you're an accountant, right?
Right.
Do this.
Right.
I've never heard that story. Okay, so, hey guys, I might move that phone a little bit closer, actually. Hey, Laura and Caitlin, can you guys hear us okay? I feel like the phone's farther away than I usually am because there's 2 of us. But I might move it closer because I'm not sure how hard it's going to be for you guys to hear us. So you might just get a close-up of our faces.
So we'll do a video check here with...
Yeah. Because we also want to be able to see when people ask questions or comment, and I can't see it from over there. Hey, Lindsay. Oh, you can hear us both great. Oh, well, that's good. Oh, and Steve can hear us perfectly. Okay, well, I'm worrying about nothing then. Well, let's see. If we do
No, well, we can lean back a little bit. That makes it, yeah, that works out pretty good.
Yeah, that's good. So we're going to be talking to you guys for sure. There's also a camera over here. So if we're looking straight, that's why.
We're not ignoring you.
We're not ignoring you. We can even put it
some other place.
Ooh.
Yeah, that
there.
works. That works.
Here we go.
Too. Yeah.
That works. Okay. Cool. So welcome. Hey, Sarah. Good to have you guys all here. Okay, so Traveltax. And then also, he told us the story of how he got started, the inspiration behind it. And then just in general, I know a lot of us in the community know Joseph Smith. He's so active in the forums. He has been such a giver of his knowledge. I know for me learning about travel taxes and understanding them clearly was all because of the Travelers Conference, the first time I went, and hearing his presentations on taxes. So a lot of us know who he is, but some other people that are watching this might actually have no clue yet. Mm-hmm. So I just want to say too, like, what is Traveltax just in general, and what kind of services do you guys do?
Yeah. Well, if you understand from the history, our primary client is a multi-state, domestic, and international traveler. Mm-hmm. Somebody who takes temporary contracts, moves around, or mobilizes to other job sites across the nation, and in the process accumulates a couple of different state tax returns. And Laura's got to go fix something else here, it looks like. And we do Canadian returns as well, because there is quite a lot of Canadian travelers. And most of our work is in healthcare. And we also help the agencies with their tax compliance for their reimbursement policies, the kind of stuff that shows up on your employment agreements when you sign your contracts, and are necessary for finishing your tax return too. And Laura's focusing in on us for another camera here. Yes, that's the St. Louis Arch behind me, and the Empire State Building as well, if I'm wondering what that stuff in the background is. Okay.
Yeah. Okay, we're good. We're good to go. Okay, and then me, for anybody that doesn't know me, I'm Laura. I'm a traveler of 6 years. Started right out of grad school as an occupational therapy traveler, so it's the only world I've ever known. Never actually had a permanent job before. And I love it. I love this industry so much. 2 years ago, I started Nomadicare, where I am the recruiter matchmaker. So I vet and I interview recruiters from all kinds of companies, and then especially for newer travelers or travelers who wouldn't know yet what it means to find an honest recruiter. They don't know the right questions to ask. They can go through Nomadicare to get matched with 2 recruiters that passed my test. And then obviously I'm always on here too, trying to educate and help you guys see those red flags for yourself, or understand tax homes yourself, so you feel empowered as you're going out on your travel journey. So today we're just going to focus on this awesome piece of our industry, which is taxes, because our taxes are really different than if you were in a permanent job. And it's really important for you to understand how these taxes work, to protect yourself and figure out why we're making the money we do, what are the actions that you need to take to keep yourself safe while you're on the road for audits, and also what do you need to keep, what receipts and paperwork for tax time, because we work in multiple states, so that's different as well. So I'm with the expert, so this is great. So starting out, Joseph, why in general, why do we even want to have a tax home? Like just the basic concept, like this concept of having a tax home, why would we even want it as a traveler?
Well, a tax home's an involved subject, which we're going to be talking about here soon. But probably the most important aspect of it is those reimbursements that you get for transportation, for lodging, for meals. Those reimbursements, which are pretty significant, whether or not they're counted as income depends on whether or not you are working away from your tax home, not whether you are working away from your permanent residence. Mm-hmm. Those are 2 separate things, and where most people get confused in trying to sort all this out. But your tax home, whether it's qualifying or non-qualifying, determines whether those reimbursements are treated as wages or given to you tax-free.
Perfect. Okay, so in the industry we hear different things like reimbursement, per diem, tax-free money. They all essentially mean the same thing. So if you hear us,
reimbursements.
What's that?
They are all forms of reimbursements.
Right. So if you hear us saying different comments like that, we're all talking about the exact same thing. So as travelers, when you get started, we hear about this concept of tax-free money. Like, what? A lot of our income is tax-free, but there's rules to that, which is what we're going to talk about. So it's not just a given because we're travelers to have that. There's this thing called a tax home, which Joseph is going to help us dive really deep into. And when you have that and you do that right, then you're able to get per diems, tax-free money, and utilize the benefits of being a travel nurse or a travel therapist or any other kind of traveler. So in general, let's just dive into what makes a tax home.
Okay.
Yeah.
And again, you have to sort of think in like a tree. For those of you that are nurses, think of your ACLS algorithm. Or those of you that have taken ACLS. A tax residence, and again, this is different from a permanent residence. Your permanent residence, your driver's license, your car registration, your voter registration, these are legal ties that point to a domicile permanent residence. That is not a tax home. A tax home is a money home, the way I like to explain it. It's an economic home. And when you are trying to determine where an individual's tax home is, the very first place you begin is with the definition of a tax home in the code. That is your main place of income.
Okay.
Period. That is the definition. Before you get to any exceptions,
Okay.
where most travelers fit into, which we'll get to in a moment.
Okay.
But a tax home is your economic home. So the question is asked, where does this individual make the majority of their money on a frequent, repetitive, consistent basis? For example, if you go to a seasonal assignment or have a PRN job and you go back there every year, frequently make significant income, if you have no other location that produces more income, you're done. That's it. That's your tax home, regardless of where you choose to live. Now, our travelers may ask, well, where do I fit in all that? Because I don't have a main place of work. But that's where the one exception falls in.
Okay.
The exception says, okay, you don't have a main place of income. And that's like most of us. We're going from one assignment to the next. We're mobilizing to St. Louis. We're demobilizing, going to Miami, whatever it may be. We're all over the place.
Yeah.
So the tax code has this exception sort of grafted into it that says, okay, you don't have a main place of work, but because you're going to all these other locations and really are not expected to move for a 3-month assignment, nobody would just move everything for 3 months and go on someplace else. Because of that, then if you have an abode, a dwelling that you maintain at all times and have significant expenses in keeping, and you are assigned away and those expenses are duplicated, then your taxed home is allowed to default to where you maintain a residence.
Gotcha. Okay.
So if you don't have a main place of work, then you look secondly, okay, does this individual have a home in which they have substantial expenses maintaining that they use for their lodging, and those expenses are duplicated when they're away. And it gives you an idea what this tax-free money is for. It is not income. And it's almost faulty to think, well, I get this much taxable and this much tax-free. The tax-free amounts, if you want to call it, or reimbursements, they're expense offsets. Because you're either working away from your primary place of work, or you have duplicated expenses. It's there to reimburse that assignment residence. And this is why, the way you really make money in our industry is you take your per diems and you go find something cheaper.
Yeah. Yeah.
Just like a trucker. You have to think like a trucker.
Think like a trucker. Work like a nurse, think like a trucker.
Yeah.
That's the new slogan.
Yeah.
Okay, so I'm going to make sure I understand this. So, tax home. A normal tax home would be you work somewhere, you make most of your money there, and so then you have a tax home.
Yeah.
Like easy. Okay.
And so for example, if you have a permanent job, that's it. That's where you go to every day. Whether you drive 10 miles or 1,000 miles to get there, that's your main job. End of story. That's your tax home, regardless of where you choose to live.
Awesome. So that's like the normal definition. And the reason that we're different is because as travelers, we literally just keep moving around. And so the government's like, well, they don't really have a tax home where they're making most of their money in one place, and that's why we fall into this funny, like this different, unique exception, right?
It's a concession for the mobile professional.
Perfect. Okay, so that's where most of us fall, and there is a way that you might fall into making most of your money in one place, which we'll talk about, but most of us will fall into this exception. And I love that you said expense offset, because that makes it really clear in my head. We do have to have expenses at our tax home, which we'll dive more into also, but the reason we get this tax-free money or reimbursement money is to offset those expenses. So let's dive into that a little bit more. And you guys, hey April, hey Casey, welcome.
It's like a romper room session. I see Susan, I see...
Yeah. If you guys have any questions too, we can see you, so feel free to pop those up. Okay, so that makes sense. So we're going to dive a little bit more into this. I want to know, a juicy question, how much more money could we expect to make potentially by having, is that recording now? Yeah. By having, by getting this tax-free reimbursement. What is the average?
Well, if you look at it in terms of the tax savings, the average tax savings, in other words, the amount you're not paying in taxes, if you have a qualifying tax home, is anywhere between $3,000 and $9,000 a year. Now that depends on where you work, how often you work, and the intensity of your work as well too. If you take a lot of breaks, the thing is though, if you are in a situation where you're having to duplicate expenses for the foundation of your tax home, you've got to pay for that. So if you have an apartment and you rent $500 a month, that's $6,000 a year of expenses for that privilege. So if you're saving $8,000 and you're paying $6,000, your savings is only really like $2,000.
Okay.
So you don't see travelers coming from the Bay Area. You know, you're paying $2,000 a month, $3,000 a month for this apartment in order to save $9,000. It doesn't make any sense.
Good point. Okay, that makes a lot of sense, yeah. All right. So let's talk a little bit more about the travelers that might actually fall into the category where they make most of their money from one place. So let me see if you can clarify this. If I work one assignment in my home state, where my tax home is, that's fully taxed, does that mean then I could go out and travel, get the reimbursements without paying rent anywhere?
Well, you have to modify that a little bit. It's not the state.
Okay.
It's the it's the commutable area. If you have a regular job in a commutable area and you go back there repetitively, frequently, or consistently, and every year your income from that location is significant in relation to any other income that is made during that time period. If you can say, or by the amount of your work and the amount of income, that this is a main place of income, then that's the foundation of your tax home.
Yeah. And could that be potentially one assignment each year if you keep moving the rest of the year?
Yes, it could potentially be one assignment a year. Now, I realize you can't get any kind of tax-free benefits from this. You can't say, well, I'm on a travel assignment, give me my lodging and meals and everything, and don't tax it. This has to be your home. If you're working at home, that's it. You're taxed on all that compensation.
Okay, so for that one assignment a year, you could do potentially a 13-week assignment at your tax home. The whole thing is taxed, though, so none of that reimbursement. But the other 3 assignments in the year, you get the reimbursements, and you don't have to pay rent anywhere in that tax home. Is that correct?
Yeah, because that's your main place of income.
Cool.
Which is the pure and traditional definition of a tax home.
Cool. Okay, hopefully this is making sense, guys. What's up, Kelly? Hey, Casey, welcome.
Now, I'll throw out one little thing in there.
Ooh, yeah,
those other places you go work, you can't be repeating them every year and wind up making more than you would at home. So you got to be careful with that, because then it becomes like you have 2 jobs. Yeah. And then you got to go back to the same analysis, which is my main place of work.
Yeah. Yeah, that makes sense. Hey, Ellen, welcome. Okay, so, and same thing, you could go home and work PRN, And that could be the same situation where as long as you work and it's making a significant amount of money. And can you define that a little bit more? I saw somewhere it might be 1/4 of your total year's income. Is that correct? For the significant amount of income to make in your tax home?
Well, you can. Sometimes it's very difficult to want to put it into 1/4 of my income, slice and dice my life up like that. But what you're looking at broadly is consistent and repetitive. If you go back for 3 months every year and do a contract and you work 9 other months, yeah, that makes a quarter. But what's important there is you had a significant chunk relation to the rest year after year after year. That's what makes it, that's what gives it more of a structure than, say, just 1/4. You can look at it like that if it helps, but the goal is that, okay, this is my main job, this is my main place of work, and everything else is random.
Okay, yeah, that makes sense. So you would go back each year and do that over and over and over again to get that pattern. Cool.
And the other thing we would throw in, we're so jumping ahead here, is that there is one of the rulings that the IRS put out a number of years ago is that a seasonal assignment is considered a tax residence unless there's income in another location that would be higher.
Oh, okay.
Which is going to dive us into something else down our interview here.
Okay, so let's dive into a part. We'll dive into the part about duplicating expenses. And so this is essentially saying in your tax home, we're going back to the exception now. You are maintaining a tax home. So you are going to be duplicating expenses and have one tax home and then traveling away from that region to go work and then do more expenses over there. So you're getting that reversement using the exception rules. So we're going to talk about the rules regarding how much you have to pay in these duplicating expenses. So I'll start with that. How much do I have to pay to that tax home, the first home, that's my tax home, in order to get these reimbursements?
And remember, you have to think of it in terms, this is my home that I maintain. This is my dwelling that I return to, my abode. How is there a money number? Well, if you have an apartment that you have a lease from somebody who is unrelated to you, well, that takes care of it. It's a fair market value. If you own your home or have a mortgage, you've already established the amount that's necessary for that.
Okay.
But when you get into some other situations like renting from relatives, when you go through all this cannot be one of those, related party kind of transactions where, well, mom and dad only want $50, that ain't gonna fly.
Oh, man.
That basement apartment in Boston, yeah, my mom and dad want $50. That's not gonna work. An agent's gonna look at that and go, this isn't an expense.
Okay.
With these related party expenses, there's a lot more scrutiny there. And it's got to look, it's got to smell, it's got to taste like rent. Unless you're living like you are in an apartment where you're splitting everything down the middle. But if you're going to call it rent, it needs to be fair market value. You got to go to the classifieds, you got to go to Craigslist and say, what if Joe Blow walked in off the street and asked my parents, my brother or sister to rent a room and kitchen and bathroom facilities? What are they going to charge them?
Yeah.
What's the going rate?
Yeah, absolutely.
I'm not special anymore, unfortunately, in this equation.
Okay, so fair market value makes complete sense. We could jump on Craigslist. We could
Or the classifieds.
Or the classifieds and see what is something going for a complete stranger, not a friends and family benefit. And then you would say to actually write up a lease, right?
It's good to have something in writing. Pay something other than cash. Because if you say, well, I pay $400 a month and it's all in cash, how are you going to prove that?
Okay, absolutely. So checks or an electronic payment.
Yeah.
Okay, and a lease would be great to have. Okay, perfect. Do you have to have your name on a lease or on a utility in one of those homes?
You can do that, but that's more window dressing than anything else. The foundation of this isn't just a utility bill. It's I'm maintaining a home. Then what happens with that? You have a rental at least.
Yeah.
Yeah, and remember, you're not just renting a room or a closet in a room. It's also you got to be able to use the kitchen, the bathroom. This is your home that you return to regularly and live in.
Gotcha. Okay, cool. And so then just to make sure we understand, can someone just pay a utility bill somewhere and call that their tax home without paying rent?
No.
No. I get that question a lot.
They're just giving a subsidy to the owner. That's all that means.
Don't waste your money, guys. Okay, and so you can rent from your mom, you can rent from a friend. It just has to be fair market value. And then you want that paperwork to show, if you were ever to get audited, this was legit. I paid, I can prove it. A lease would be a great thing to have to prove it too, right?
You want as much to make this look, smell, and taste like the real thing, actually be the real thing.
Yeah. Perfect.
Otherwise, it's going to be held in a lot higher suspicion.
Perfect. Hey, Steve, thanks for the question. I'm going to circle back around and read these questions in just a second. Let's say me and my mother decided I could rent a room, fair market value. Does my mother have to put that rent I give her on her tax return?
If you call it rent, then you got to follow the rent.
Okay.
That is best. Sometimes you're not going to be able to control what mom and dad do. But that would be the normal approach. Now, if you're living with your mom and you split the expenses half and half, you're no different from a roommate in an apartment. So then that's not really rent.
Okay.
So whatever approach you use, and the point of this is we got to prove that we're maintaining a home. These are just two methods. But if we're going to rent from somebody, that recipient is getting rental income.
Okay.
What do you do with rental income? It goes on your tax return.
Okay. At what point would I have to start paying my mother rent for that room before I leave on my first travel assignment?
Well, the best scenario is that it's seamless.
Okay.
You're done with, you finished your job in the area and you had your apartment, now you move in with mom or whoever it might be. The sooner the better, because once you've got to be maintaining a home to begin with.
Okay.
So once it starts, it can't stop. Just because if you're going to continue your travel career and you're going to go away for 3 months, just because you're gone away 3 months on a little trip or gone overseas, you don't stop this. You're maintaining a home or you're not.
Okay, that makes sense. So that's a good one, because for me, I know when I travel, I'm someone that is a location adventure traveler. I always have been. So I would have always taken an assignment or maybe at least a month off each year to go overseas and do the backpacking thing. And so it's good to know if I'm renting from my mother or a friend, you can't just stop that when you're not doing a travel assignment. You still have to pay rent for it to be maintaining a home, right? I'm just
like
making
anybody
sure I get
else
it.
would.
Yeah.
You're either keeping a home or you're got a stick house, one of the two.
Perfect. Okay, and then let's say brand new grad, OT, PT, because I know the RNs can't travel as brand new grads. So they go back to their mom. Let's say they're starting an assignment March 1st. If they start paying their mother rent for March at the beginning, is that okay? Or do they really need to pay it February or January as well before they even start traveling?
Again, you go back to the sooner the better, and when you begin traveling, you're just right out of school. Let's stick with sooner the better. Once you realize you're ready to go, let's get something in place.
Okay. Perfect. Okay, so then we're going to dive into the other part of this. So there is the duplicating expenses, and I'm going to look and see Steve. Okay, good. So Steve Klein, thank you for the question. He said, Joseph, if you were paying fair market value to your parents and they are claiming it as income, as they should, can they turn around and then gift you that amount back at the end of the year? So could they give you a big Christmas gift of the amount you gave them in their rent that whole year?
What they choose to give you back is their business once the whole transaction has been recognized.
Awesome. Yeah. Cool. Great question. Thank you, Steve. Okay, so that was talking about duplicating expenses. I did see another question up here, too. I'm going to see if it has to do with duplicating expenses. So, Carolyn, I'm looking to travel, but I'm married and own a house. We file taxes jointly. My husband will remain in the city. Any issues with the situation that you can talk about?
Not really. That's best case scenario for the most part. You got a house you own. Your husband's staying behind. You got another person in that that home that's a marital or lineal descendant, like a child.
Mm-hmm.
And one of the questions that you probably are going to address, what if my home is paid up? Well, that doesn't matter. You got the cost of ongoing home ownership, not only currently, but also for all that you put into it in the past, and it's still your home.
Nice. That's good. That's a good situation to be in. Okay, so we talked about duplicating expenses. Awesome. That cleared some things up for me. We talked about the other one. You could go home and make most of your income from one place, and then you could travel away and not have to pay rent. But then we'll talk about the other piece, which is just as important, and it's the not abandoning this tax home. So let's dive into that. How long would you recommend going home, back to your tax home each year?
Well, again, we are keeping our home. We're maintaining our home. Somebody who keeps a home, maintains a home, doesn't just leave forever. You can't just stay in perpetual travel status. It's hard to come to a number of days, but there are certain parts in the IRS literature that point to 30 days, 30 to 35 days a year as being your goal.
Okay.
If you don't come home for 2 years in a row, you risk what is called abandonment.
Okay.
Abandonment is just like if you leave a car and you park your car somewhere, you leave it and never come back. Obviously, you don't care about it anymore. So there's this concept of abandonments, and to avoid that, it is recommended that you come home at least 30 to 35 days a year.
Okay.
Do you have to work? No, but it helps things if you did, but most travelers can't do that, not in our industry. What do you do when you're home? Well, you got to be at home, mend the fence, check on the shingles, and clean out the chimney, or whatever you need to do.
Okay, great. And does it have to be consecutive?
No.
No.
In fact, non-consecutive proves that you're home probably more than just a pit stop.
Yeah. Yeah, absolutely. How does someone prove that they were home?
I think everybody has had to stop at a gas station sometime when they're at home. So that gas receipt, it's the one time you may want to keep a gas receipt. It shows the time, date, and place, and okay, here we go. I can prove that I'm at home.
Yeah. So I'm guessing even like using our credit cards and debit cards, that electronic statement that shows the restaurant we went to that was home and the grocery store, all of that would be significant proof.
Well, most of the time receipts are going to tell you that. Even if you're at a pay at pump kind of thing, it's going to spit out a receipt for you.
Okay. Okay, great. And you said working while home, we don't have to, but that's great if we do. So we could go home and work PRN or have a seasonal job, and that would be great. Yeah. Is there any other paper ties you need to keep there to show you're not abandoning your tax home? And when I think of that, I'm thinking things like driver's license and stuff like that. What paperwork should be tied to that tax home to show we didn't abandon it?
Right. And this is where permanent residence ties have an influence, because when we started, we said a tax home and a permanent residence were different things. But if you're saying you're maintaining a home, and that driver's license is in Boise, Idaho, and this home you claim is in Kansas City, Missouri, and your voter registration is in Los Angeles, California or something, you're really shooting yourself in the foot.
Okay.
Because you say, okay, this is my home I maintain, but my driver's license, all this stuff is over here and over there. That's not being very consistent.
Okay. Okay, so we could say driver's license, tax
car
home,
registration,
car registration,
voter registration,
voter's registration,
house of worship memberships,
membership at a church,
civic memberships.
Okay, a bank in the area.
That's archaic, actually. We're in the 22nd century now, and who has a bank locally when you're on the road?
I know. Mine's one of the ones that aren't even brick and mortar. Yeah. It's like just online.
And I even see some of these tax home forms from these agencies that say you have a telephone in the area of your home. I don't even, cell phones are VoIP now.
Yeah.
That's archaic.
All right, cool. Awesome. All right, that makes sense. And I'll say something about that too. So sometimes we go to a state to work, and the state will have a law about changing your driver's license within 30 days or something like that. So one tip is to have a copy of your contract in your car. So if you do happen to get pulled over and a police officer is like, you need to change your driver's license or your car plates, you can show them, well, this is just a temporary job. I'm away on travel, and that way you don't have to do that. Does that sound fair to you?
Yeah, and it can become a dicey situation sometimes. The first thing is that most of these residency, like once you're here 30 days or become a resident, they're for people who intend to move there.
Yeah.
Because we got construction industry types and all these people that come into a state to do these temporary jobs. But if you get stopped, okay, here's two things. Don't say you moved. Don't say, well, I just moved here once you say that word move, that brings up a whole new can of worms. You are only here temporarily. Here's my contract to prove it. I didn't get my job. I have a temporary duty station or a temporary assignment. Don't talk like a resident.
Yeah.
Talk like somebody who's only there for a while.
Yeah.
And there are some unfortunate times, especially with these little apartment stakeouts where they send these officers or somebody recording the drivers, the car tags, where they're from. You get this sometimes. You may have no choice. Some states have a temporary license for people who are just there for a short period of time.
Okay.
But if you're forced to get that license as soon as you leave that state, it'd be a good idea to take it back, because once that happens, then we got insurance issues and this kind of thing.
Yeah, sure. Okay. Ooh, insurance. Do you actually want to say anything else about insurance? Because I know when I get my own insurance, my tax home is New Hampshire. So my insurance out of the Affordable Care Act would, and this is, you might not know this, but
Health insurance, you mean,
yeah, with health insurance. And so I had to find an insurance that could do multi-states, at least for emergency care, but all my primary care had to be in my state home. But does that make sense? Like, is that how you would do it? You wouldn't get a new health insurance when you move to a new state, because it would be like you moved there.
Stick with it, and it's based on your permanent home.
Yeah.
Not necessarily your tax home. If you're working someplace to maintain your tax home.
Yeah.
In another state, it's your permanent home you want to focus on. And that would apply for car insurance as well.
And car insurance. Okay, these are good to know. Hey, Sal, welcome. And April, I saw that you had a question. Let's see. April is practicing in Idaho, but plans to start traveling the next month or two. Yay, April. I will be paying rent to my parents in Washington. I have not worked yet as a PT in Washington. Can I start traveling without taking the first assignment in Washington? Does that make sense?
Yes, it makes sense. And this is another one of those little areas that we can run into some problems with, because, and again, we're not talking state, we're talking locality. So I'm just going to use Spokane as a placeholder in this discussion. So let's say you're going to Spokane, and you're moving there from 400, 500 miles away. Can that automatically become your economic home because you're paying somebody rent? If you don't have a spouse there and kids there, you ain't got a problem. Because in the rules, we've satisfied this duplication part of it, but we have abandoned the old home. And in abandoning the old home, we have nothing established monetarily, economically in this new home. So we recommend to clients, if at all possible, to get some work in that area, whether it's PRN, a local travel assignment, agency, whatever it might be. Get some work in that area before or shortly after traveling, so you can show that you have an economic relationship, income relationship with this area. Because otherwise, there's too much personal choice involved in this. It's not like you're going to Spokane to serve the northeastern corridor for your employer. You're going to Spokane because it's an easy place for you to live while you go all over the country. That element of personal choice actually works against us. And a lot of audits that we have handled that involve moving then traveling, or traveling, then moving, then continuing traveling, especially for somebody who's single, become a problem.
Okay.
Because instantly, well, this is their personal choice. There's no business purpose for this.
Yeah, okay.
So it eliminates a risk factor there. And sometimes you just got to go through of what you can do, but that's the best case scenario. And that's what we encourage clients to do.
Okay. Okay, cool. Okay, so that was that category. We're going to move into the how far away do I have to go? So a lot of us has heard of this 50-mile rule / myth, but we're going to talk about what does that mean? You have a tax home. How far away do you have to go from that tax home to then duplicate expenses, have another place to live, and then get this tax-free reimbursement money? So tell us about, Joseph, is the 50-mile rule true?
Have you ever played the game of whack-a-mole? You know what whack-a-mole is?
Yeah, where the moles pop
It's
up.
when you beat this little varmint or whatever, it stuffs up, comes up out of the machine. You want to hit them every time they come up.
50 miles.
That is
50
what I
mile,
think I'm
50
doing.
mile.
Every time I hear this word, 50-mile rule. I feel like I'm playing the game. Well, if you go to my blog, look at the very first post I ever did a couple of years ago. I got a picture of a guy playing whack-a-mole on this.
It's hilarious.
It drives
Okay.
me nuts.
All right, let's hit that mole one more
All
time.
right.
50-mile.
The only
roll
thing
mole.
50-mile rule proves is that you drove 50 miles. Wow.
Okay.
Does that mean you're going to get tax-free money for lodging? Why? Why should you? Well, I drove 50 miles. So what? Let's just use a piece of logic here. Why should you get a lodging reimbursement unless you have a lodging expense? That is what it's for. 50 miles only shows you drove 50 miles. It does not show that you were far enough away from the assignment, depending on how you want to do this on the video, far enough away that it requires you to get rest or sleep at the assignment because of your duties and incur the lodging expense.
Yeah.
If you drive 100 miles there, drive 100 miles back, or stay with Aunt Sue or whoever, and you don't have an expense, you really shouldn't be getting tax-free treatment of that lodging allowance.
Okay. That makes complete sense.
Yeah.
So you have to go, wherever you go, it doesn't matter the mileage. It's just about that you actually need a place to sleep and rest because you can't actually commute. It's not a commutable distance. I'm going to backtrack one second to the duplicating expenses one because you said the Aunt Sue or Aunt whatever. If you have a tax home that you are paying money at and then you travel somewhere that you do have family members, how does that work? How much do you have to pay the family members? They might be offering you to stay there for free for your 13 weeks, but you want the reimbursement. You do have a tax home. What would you recommend for that situation?
You need to pay them something reasonable. It's not this situation where you're maintaining your main principal home. This is a travel home, and we're not really bound by that fair market concept.
Okay.
But something reasonable. What would you give? If you're in a high-cost area, you may want to give $100 or something. I don't want to give you a number because you could get so low that it's not really worth it.
Right. Okay.
You need to pay something. You have to have an expense. That's the way per diem system works. There has to be an expense that triggers the treatment of that as being not taxable because it's not considered wages.
Okay. And it'd be the same thing where you need that proof of paper because obviously if you're audited, you have to have proof. So again, don't do anything in cash. If you're going to pay the money, you have to. You want to be able to prove it, or it doesn't really make sense to pay in cash. Okay, cool. Just wanted to clear that up. Okay, so the 50-mile rule, we know it is a myth. And then we'll just to dive a little bit deeper into this because I get asked this so often about what is a region anyway then?
Well, this is where it's subjective. You may hear people say, well, tax code's so great. There are certain areas that you just cannot define because everything's facts and circumstances of the individual's activity. But probably a good way to phrase this question, let's say I'm at one assignment location. How far do I have to be away before it's considered a geographically different area? That kind of thing. Well, you're sort of on those same guidelines. So it's got to be far enough away that you could not commute. But practically, this is the rule we use. If you're in assignment A and in assignment B, and you can live in the middle and have a regular commute to either one, it's basically the same area.
Yeah, okay. that makes sense.
That's a good rule of thumb to use, and that could be 100 miles, 120 miles, or something, whatever. It all depends on the area. One thing to be on the guard against, though, is, let's travel. Let's go to all these nice locations all over the U.S. Let's not orbit. Let's not start in San Francisco and go over to Oakland, down to San Jose, and do this thing all over again. There's this great thing called travel nursing and, travel therapy where you can go see the world.
Are we supposed to travel? Is that what we're supposed to do with that?
Yeah, we're supposed to travel. Just not circulate in orbit and go in circles. You get dizzy doing that after a while.
Totally. Awesome. Okay, that makes sense. I saw a question pop up. So let's see, Julie. Hey, Julie, what's up? Okay, I'm traveling with a fifth wheel, nice, and truck, and have payments on both. Will it be tax deductible? Also, if you get a travel stipend, does it not cover the complete cost it took to get to the assignment?
Okay, that's actually...
I keep cutting off, actually. I wonder how I can... I might need to... I don't know how to see the whole question, but okay.
Well, there's actually two questions in there. That first question, the second question was, okay, I'm going to my assignment, that travel there. What if that travel pay doesn't cover the expenses?
Okay.
Well, the excess is deductible because your reimbursement, say, was only $300 and you spent $500. Okay. The other part of that question is, I'm traveling in a fifth wheel, an RV. Can I deduct that cost?
Okay.
Here's a problem. It triggers the per diem. Okay, let's back up. Let's assume you have a qualifying tax home to begin with, because all you have is the RV. You're not away from home. You're leaving a vacant land or a pad behind you, and that doesn't constitute a residence. But let's say you do have a qualifying tax home. You either have a job or you have a home or something you're keeping at your main home, and you're in your RV going to the assignment. You can't deduct that RV because you're using it as a residence.
Okay, gotcha.
There's a tax court case that came out back in 2014 that sort of clarified the rules. When you use it as a dwelling, you can deduct the interest on it because it's like a mortgage.
Okay.
You can deduct the taxes on it, but to deduct the everyday expenses, you can't because it's a residence.
Gotcha.
The little incidental expenses like the utility hookups and all of that trigger the per diems that you receive as being excluded from wages. So one of the easiest audit triggers that I can usually find is somebody trying to depreciate their RV on their tax return.
Good question then. That's great. Awesome. So come on over, guys. You want to meet some of the other Traveltax
some of the other gang here.
We have two beautiful blondes that when you call into Traveltax, you might get one of these wonderful ladies. Do you want to introduce yourselves?
I'm Brenda. I'm Tiffany.
Wow, you guys look so much alike. Why is that? These are such friendly ladies, and they're so knowledgeable. I can't even tell you how many times they've helped me when I've had a tax question, and they never make me feel stupid, and they're so nice. So whenever you guys call in, you might get one of their voices. But
we're always here to help. That's what we're here for.
Yeah.
So.
And we also have Sarah, who lives a little bit away, not here. And then my wife will answer questions occasionally. She's at the house right now. Teaching science to the youngest.
This would be such a cute picture right now, guys.
Yeah.
We look like we're posing for a Christmas card or something.
There you go.
I feel like I'm part of the family
Traveltax Christmas card. We're always here to help. Always. So
yeah.
Call us anytime.
Yeah. Awesome, guys. Okay, sweet. Love it. Okay, so let's talk about Joseph. I just traveled to San Francisco. And I meant to travel. I promise I did, but then I fell in love with a boy. I'm making up a story, by the way, guys. I fell in love with a boy, and it's about to be a year. What are my options? Like, how long can I stay here?
To continue the relationship. That's what you asked. You
to help me.
I just want
some relationship advice. Yeah. So, how long can I stay in one area until that area then becomes my tax home because I'm making most of my money there?
Well, you start with, you can't stay in an area continuously inclusive of short breaks, more than 12 months.
Okay.
The moment you sign a contract that puts you beyond 12 months, let's say you're at your 10th month, you sign a 3-month extension, you've committed yourself to 13 months. Your tax home shifts then. It doesn't go retroactive, it shifts going forward because you've committed yourself beyond the 12-month period. The rationale is that if you know you're going to be there more than 12 months, well, you might as well move. That's always been the rationale in the tax code.
Okay.
But that begs a question. You've found the boy, and you want to continue pursuing the relationship, or some other reason that you want to stay. How long do I have to go away to restart the clock?
Yes.
The question cannot necessarily be answered until you answer another question. How long do you intend to come back?
Okay.
If your answer is another 12 months, you need to be gone 12 months.
Ah, okay.
Remember, I said a little while ago about that ruling about seasonal assignments,
Yeah.
make tax homes. You also don't want to show 3 calendar years in a row of significant income in the same place.
Oh, interesting.
So what we tell clients, you got this rule about seasonal assignments, you got this rule about the 12-month rule. What about this little area in the middle? Don't be in the same place more than 12 out of 24 months.
Okay.
Go away as long as you were there.
Okay.
And again, remember, a tax home is a main place of income. That is why a seasonal assignment can become a tax residence, because it is your main recurring
Gotcha.
place. If you told me you're just going to go back for 3 months, then I wouldn't be as picky about you going away for a year. I'd say, okay, you can go away for 3 months, come back for 3 more, and you're done, you're out, you're fine. We can
Okay.
deal with that.
Okay.
But most travelers try to take it out.
Extend
to
it
the
as
full
far as
12.
possible.
Yeah.
Okay. So general rule of thumb, even though things are not super black and white, you want to be gone at least as long as you were there. You don't want to go back every single year. So I can't do an assignment every year, same time, where I become seasonal. It becomes a tax
Yeah,
home.
it becomes a regular place of income. That's
Right.
what you don't want it to be.
Okay. And then how far away do I have to go?
Well, we already answered that question.
Right,
sort of.
but still, people like to hear it two
Yeah.
different ways sometimes.
Yeah, if you can live in the middle of 2 places, let's say it is San Francisco. You can't go across the bay to Oakland because you can do that. People do that all the time.
Still
San
commutable.
Jose, go live in Palo Alto near the or near the airport. You can do that. So it's a place that's not commutable, and not commutable if you live in the middle.
Gotcha. Yeah.
It could be 100, 200 miles. All depends on the area.
Okay, perfect. Okay, so let's just say I stay somewhere over the year. I make that choice. I'm gonna stay. I do love this guy. What happens that year that I was there before? That still remains. I don't have to retroactively then pay
No.
all that back, but then starting then I have to pay taxes on everything. Is that correct?
Once you commit yourself, pen hits paper. Once you commit yourself beyond 12 months, it starts going forward.
Yeah. So I want to help you guys understand this too. If you sign a contract that shows you're going to be somewhere over that 12 months, even the months leading up to the 12 months are taxable because you committed yourself to it, so you were intentionally going to be there. Is that correct?
All right.
Right.
If you sign a 2-year contract, we don't even have this discussion to begin
No,
with.
that's obviously a tax home then. Yeah. Okay. All right. Oh, Lindsay, that's too bad that it's frozen. Julie, so you can't. Okay, so Julie's talking about the RV again.
Right.
So you can't depreciate it either then. Did I hear that correctly? You can't depreciate it then.
Correct.
Correct. You are correct. What about mileage when working out of state? Can you claim it to and from work?
You can if it's reasonable. Now, here comes the problem with RVers.
Okay.
If the agency puts the travelers up in corporate housing 5 miles away, you cannot live 40 miles away and deduct the 35-mile difference. because you were offered an alternative. You're stuck with the 5 miles. When you're on the road, it's not really commuting per se. You are in travel status. So you have to have a reasonable business commute. So if the per diem is there for you to be housed as close to the facility to fulfill your duties, not so you can live 60 miles away in an RV park.
So we can claim the miles to and from work. It just has to be a reasonable commute. Right. Okay.
Right. So oftentimes my RV clients, I'm going to either ask where the agency house them in corporate housing, or do a little search and find where the group of apartments are.
Yeah. So it probably wouldn't be more than 10 miles. Ish.
Yeah.
Most likely.
Depends on the location.
Right. Okay, cool. That was good to know. Okay, so what if... Okay, first I'm going to ask this. Are there states that are the best and the worst to have a tax home in if someone does have some flexibility of trying to figure out where that is? Because I think some of them have some tricky rules.
Right, and it's not so much the tax home as where your permanent residence. Because when you get into multi-state tax, you're going to file a home state return where your driver's license, car registration in it, because you can have a tax home completely different. It's like a professional sports player. I keep a list of what I call the top worst states to be a traveler from.
Okay.
And unfortunately, the first 2 are right next to each other. Indiana is number 1 worst. Ohio is the 2nd worst.
Okay.
Pennsylvania is somewhat the 3rd worst. And then all the states that have high tax rates are the 4th worst, and 5th worst, and 6th worst.
And then the high income tax.
Right. Maryland used to be the worst, but there's something happened back in 2014 that changed that. The reason Indiana and Ohio make it there is because they don't have only a state tax. They have a state and county in the case of Indiana, and a state and municipality in the case of Ohio. The reason Pennsylvania doesn't get up with them is because if you pay more to the other state than you do Pennsylvania, that excess trickles down to your municipality, so it's actually better. Indiana gets even worse when you're working in Arizona or Oregon, and previously California. When we're going to get to multi-state later on, but basically they have this reverse credit arrangement, and it goes against the normal flow of things, and Indiana just becomes a pill with that.
Okay, so let's say I have a tax home in Indiana. I want to move my tax home. I'm so sick of the state and the county taxes. How does someone move their tax home?
Well, we sort of touched on that. If you're going to move, you not only got to change all your legal ties, driver's license, car registration, you got to do what everybody else does. You move. And it's important to get rid of those old ties.
Okay.
Because these state revenue agencies, before they relinquish you, it's like a parent giving up a child. You've got to sever the ties and establish new ones in a new place.
Okay.
When you take off on that plane, you got to land. You can't just take off because, if you don't land, you'll run out of gas, but you get the idea. You got to land somewhere. When you land somewhere, you have to reestablish those ties.
Okay.
If you let them linger, especially in a state with a high tax rate or it's very aggressive, you might be getting some happy letters down the road. Nobody likes happy letters from, or love letters from a state revenue agent.
Don't want them. Nope.
So, and then on top of that, we go back to that income issue.
Yeah.
If you're moving because your spouse has to be there, that's fine.
Okay.
We don't have to worry about that. We have a business purpose. Nobody expects you to live apart from your spouse just because one spouse moves. So if you move with your spouse, that's fine. But if it's just you, like a lot of travelers, probably best to look at getting some income in the area before you consummate that, or shortly after you begin traveling.
Okay. Awesome. Okay, so tell me this.
And you didn't ask me what's the best states to be a traveler.
Oh, I want to know. Yeah, what are the best states to be a traveler?
And we have to sort of distinguish this here, because if you're a nurse, you're looking for a compact state.
True.
So the best 2, South Dakota and Texas, Why? Because there's no state income tax.
Mm.
That way you don't have to worry about your home state having higher tax than the work state.
Mm-hmm.
Now, if you're like me, you live 60 miles from the South Dakota border, this nice 20 below zero weather becomes a case of big deal. It's just a matter of life. But you're from Texas, you know.
Mm-hmm.
So, you know, you come up here and everything, you're going to get frostbit the first minute you walk out of here.
Yeah.
You need to get down in a warmer confines.
Yeah. Totally. Okay, so here is the question that everyone wants to know. What if they did not know this rule and they have already been traveling for 2 years? They're panicking right now. First of all, what should they do next? And then what happens if they do get audited? What is the penalty, worst case scenario they could look out for?
Yeah. Well, the best thing to do is, you know, straighten it out, get compliant going forward.
Mm-hmm.
Technically, all of the excess reimbursements is income. And unfortunately, this is a common problem we have, because there are recruiters that try. I fly all over this country doing recruiter training. Mm-hmm. And there are some agencies that is very important for them to do that, and I appreciate those agencies in the industry. But there's a lot of turnover in the recruiter ranks, incredible turnover. And every time they come on board, they've got a lot to learn. And oftentimes they're getting tax information from some other source, or especially if they're coming from another agency, they're just using whatever information they used at the previous firm.
Yeah.
And that happens often. Recruiters will jump ship and go to another one.
Yeah.
So get it straightened out going forward. Now, what if you get audited? Well, if that auditor is smart, they're going to be looking at your employment agreement, and they're going to wind up adding back all those reimbursements. If you already know that it's a problem, well, fine. You know, pay it, be done with it. Will you incur penalties? They may want to say it's a negligence penalty, but usually if you show that you didn't understand what was going on, it won't. So the worst case scenario, the best case scenario, which is actually more common, is you'll be charged interest for that amount.
Okay.
And also remember, if your federal return is audited and you have to change it, then guess what else you have to change? Federal, state, local, it all trickles down.
Yeah. Okay, fair enough. And do you know what the interest is that people have to pay on that?
It's usually the Fed funds rate plus a few percentage points, and right now it's anywhere between 3 and 5 in the current environment.
Okay.
States will have their own amounts.
Okay, cool. So you have to pay back the tax that you did not pay.
Right.
That
Plus the
all
interest
becomes income,
charge.
so then you pay that plus interest, which could be
Right.
3 and 5%, and then fingers crossed, but maybe you have to pay a
Right.
penalty on top of that, especially if they could prove you knew.
Mm-hmm.
Yeah?
Yeah.
Okay.
And keep your records up to 7 years, because they could open it up for 6 years in our industry. Normally it's 3, but because tax-free money can be almost more than 25% of your total compensation, they will see that and add it to 6 years.
Okay. 6 years. And one tip, always keep a copy of your contracts for
Yes.
that long. Even, it's not like you have to keep the paper like Evernote, like Google Drive, but you need a copy of these contracts.
Yeah, you can scan it into a PDF or whatever. You can do everything electronically.
Yeah, it's easy for us to forget that because maybe the contract is in the agency's program and we just like electronically sign it, but we forget to download and keep our own copy on our file. So that's really important should you get audited. Okay, can we jump to, oh wait, I saw one comment on here from Amanda. Hey Amanda. I posted a question on the feed the other day. Yes. Oh no, Amanda, we are getting close to answering all the questions from Facebook, so you're coming up, girl. Don't worry. Hey Lindsay. Hopefully we're not frozen anymore, Lindsay. Welcome back. All right, so we're going to jump into low taxable wages. All right, in the low taxable wage, so what we're talking about here is when we get presented our pay packages as travelers, and we have a tax home. So we get these reimbursements. It's going to be broken into the taxable part of our wage. So it's not like the whole income is not taxed. We still have a taxable portion, and then the reimbursement, which offsets the duplicate expenses. So different companies have different rules within themselves of what they'll do for the taxable part of that pay. Is what we're talking about here. So let's talk about low taxable base wages. If you were to take a pay package that had a very low taxable base wage, like under $15, that would be extremely low for an RN, for an OT, would I be more likely to get audited because I took that pay package?
And that is we can go on hours about that. And the thing I always try to make sure people realize, it's not the low wage number, it's the process by which the agency gets to that.
Okay.
We have over 25 staffing agencies that have been audited or are currently under audit. The low wages is the nasty optic that draws attention to the whole process.
Okay.
But you can find yourself in situations like going to St. Thomas, you have no choice, because that bill rate is this much, all of the cost of living is all here, and then we got just this little bit of area left over. That's your taxable wage. What else are you going to do? You're not going to be able to live there.
Okay.
But if you're doing an average assignment, you may have 3 agencies in the same location, and one may pay you $25 an hour, another in $20, and another one $15. Oftentimes you'll see them directly proportional to the per diems or reimbursements that you got. It would be difficult for me to say, don't take this, don't take that. But the one thing we do have to keep in mind is that the lower the wage goes, the more there is a risk factor there. And it's not so much in the audit. Think of these things. If I intend to buy a house down the road, or soon, and it's $200,000 home, I am not going to get it on $10 an hour of wages.
Nope.
Those per diems, remember, are income or expense offsets. They're not income.
Okay.
If I get hurt and I miss work, that workers' comp, the disability, all of that's going to be based on my taxable. It's not going to be based on my per diems. If I already have a home and I have a big mortgage interest payment and I make this much, well, where's the money coming from? That could trigger an audit if it happens year after year after year.
Okay.
But you know, the audits may come down from the top. They may look at the agency's low wage practice and go, okay, let's audit some travelers to build some evidence.
Okay.
You've got to be circumspect here. I mean, if you're a nurse, you're not going to make what you would at a normal job. These bill rates in the industry don't support it unless it's a crisis shift or something.
Okay.
But you have to look at that bottom wage and you go, am I comfortable with it? And if you're getting close to the Social Security point, that's the other thing. You can, Social Security credits can be, not the credits as much, but your earnings average can be skewed. So for the older travelers, and really we have 2 types. We have very young or older. We don't have a lot in between. They're more concerned about that.
Yeah.
But you can, imagine this, you're getting $10 an hour and now you've got earned income credit and you're getting scholarships based on need, and then the next thing you know, the next year you make 5 times as much money on paper. There's some.
So they might be looking at those
issues.
big changes or the big gaps and how much you're getting paid on paper versus what you're spending on mortgage, and those gaps could trigger a red flag for an audit. So it's more just like the disparity.
I mean, all the IRS sees is your total income. When people say, well, the IRS sees this and audits you. Not necessarily, but more importantly, they see who you work for. And in this environment that we have, well, they work for a travel healthcare staffing industry. Oh, we're looking at them. So,
Okay.
you can follow
Okay, so
the
those
trail.
are great things to keep in mind. Awesome. Thanks. Okay, so a little bit about per diems. So remember, if you are a newer traveler per diems equal tax-free reimbursements. So that's what we've been talking about. I'm just going to switch the language to per diems real quick. So per diem, reimbursement, tax-free reimbursement, all means the same thing. There's a website called the gsa.gov. Can you explain that website to us a little bit?
Yeah, well, per diems, when we talk about reimbursements, anytime you get some sort of tax-free or non-taxable payment, often it's there to reimburse for some expense. In the normal world, you've got to have a receipt for that. You got to have a log for that. Per diems sort of a sub-segment of reimbursements because they apply to meals and lodging. And you know, I'm probably filling in information that may not be there, but imagine this: if we have 100 people in a sales force, we send them out on Monday, they come back Friday, they dump all this paperwork in the payroll manager's desk, and then he has to cut a check to them to reimburse. That's a huge administrative hassle.
Sure.
So what are per diems? They're receipt substitutes.
Okay.
So you go to the GSA site and you see this amount for lodging, you see this amount for meals. What that is the maximum, not the minimum, not the standard, the maximum that the agency can pay to their employee without receipts, as long as they've done the tax home due diligence.
Okay.
They can pay up to or below that amount without the receipts for meals and lodging.
Okay.
So it's a receipt substitute. So if you say, well, I got $1,000 a month, I paid $500, as long as the agency wasn't the person that got you that apartment for $500, the actual expense is considered $1,000 because that's what you got.
Yeah.
That is an administrative decision that was made a long time ago that says, well, the cost of maintaining all this paperwork is more than the tax revenue we're going to save by being so exact and ain't about the exact amount.
Okay, cool. So then we, as travelers, can go to this gsa.gov website and see what the maximum is.
Maximum.
And it breaks it up between meals and incidentals, and then lodging is separate. And the number that we see on that chart, is it daily? Is it weekly?
Daily.
Okay,
Which
daily.
gives you a little insight into, you're doing a 3-month contract. You should not expect. Some agencies do pay the full daily. But realistically, you're doing a 3-month contract. And if you're working for a government agency on a temporary duty assignment, you may only get 75 or even 55% of that per diem because it's a long-term contract.
So it's just up to the agency what they want to do with that, is what you're saying.
Right.
Yeah. Okay. Okay. So that makes sense. Now, some questions that come up is, what if you're sick? You missed a week of work, even. Can the company say, we're not paying you then that reimbursement money for that week because you were sick?
And that's a little bit of semantics of how you say it.
Okay.
They have to, they should, and this is what I tell the agencies, they should pay it.
Okay.
Do they have the right to penalize for the missed shift? Yes.
Okay.
But the mechanics of this, I pay it and I penalize, but they can't, and some of this gets into corporate compliance, so if it gets a little confused, they can't just penalize back the per diem. So often you'll see them penalize the per diem plus cost and that kind of a thing.
Okay.
But they can pull it back, but however they arrive to that, then this is a thorny issue because a lot of clients, hospitals, will cancel and it's not our fault. I was one of those that got canceled on one of my contracts, and I was fuming mad, let me tell you. And it's not a pretty sight, but if you miss a shift because of your own volition, well, in this industry it's unfortunate, but they do have the right to penalize that.
Yeah. And just to clarify, they're penalizing because if we don't work, they don't get paid either. So that means they're paying us money they did not receive.
Right. They
Just
not
to
only
see a
don't
bigger
make
picture
money,
of
they're
it,
incurring
right?
extra cost.
Right. So there's, I guess, just to show the big picture of that, that's probably the reason that happens is they're not actually receiving that money if we're sitting at home sick. We have to work the hours for them to get the bill rate that the hospital is giving them. Okay. What if someone is close enough, let's say 2 hours or 3 hours away, to drive home each weekend, and so they go home each weekend to be with their family? How does that affect their per diems?
Well, the way you let's just sort of throw a blanket over all of that. The lodging and meals are generally paid 7 days a week.
Mm-hmm.
So if you have an apartment the entire time, you've satisfied the lodging part. If you go home on your weekends, well, you can't really get tax-free meal allowances if you're sleeping in your own bed.
Mm-hmm.
However, you can deduct the cost of that trip home up to what you forfeited. So oftentimes that weekend trip, you may lose $100, but you make it up with a $100 deduction for the trip home. It's when you're only commuting and staying in a hotel 3 or 4 nights a week that this really becomes a problem.
Okay.
Because if you stay in a hotel 3 nights a week, 4/7 of that lodging allowance is potentially taxable. And the meals as well too. Because you were not away from home and you did not incur the expense.
Okay, so let me just clarify for the travel, like my perspective, if I got a pay package, and they pay me weekly, so like 7 days a week per diems, and I go home, drive home, I mean, do I have to tell my company they pay me less that week, but then what are the actions I take to do that correctly?
All right. Well, there's 2 sides of it.
Mm-hmm.
The agency is actually required to monitor this. Sometimes they don't do a very good job, but you'll find on some tax home statements they'll say, "Will you incur lodging expenses 7 days a week at the assignment?"
Okay.
The traveler is under obligation to return excess. Sort of fancy
okay.
term.
Okay.
So if you don't return excess, then it's considered taxable. So if this is your case and the agency's not going to correct for it or just doesn't for whatever reason, then if we're doing the tax return, we asked you these questions and we're going to record all the reimbursements and all the expenses, and we will include in the reimbursements that part of it, your per diem wasn't qualified because you were at home. So if your reimbursements per diems are in excess of your expenses, then it becomes taxable income. Because you can have a situation where that happens, but you have so many other expenses in other categories, you suck it up.
Yeah. Okay. Okay, so here's something about per diems. When we have extensions, we extend to the same place, a lot of times we will get a bonus for extending, or they'll raise our hourly rate because they are able to put more money into our pay package since they're no longer paying travel from point A to point B, or our background checks and things like this. Can companies actually raise the tax-free part of our income, or are they not allowed to do that? And that's just to help the expectations of where we can get money on extensions.
Yeah. And you're asking can and should. That can be sort of fun. If I'm the agency, I don't want to do that. I don't want to give you a raise in the per diem.
Okay.
And it's not just the IRS, it's the Department of Labor. They don't like this because it looks like wages in disguise.
Right, okay.
They're better off reimbursing a trip home.
Okay.
Send you to a seminar. If they want to do it tax-free, and again, this is corporate compliance stuff, they're better off finding something else to reimburse. They can always give you a higher rate. They can always pay you a bonus. But it's not in the agency's interest to do a raise in the per diem unless you're in Branson, Missouri, and it's a seasonal thing.
Gotcha. Okay, perfect. Okay, let's say that the company did not max out our per diems from the GSA.government. Is there anything that we should be putting on our taxes? Can we deduct the rest? Does that make sense?
Well, yeah, it does. And
Okay.
of course it goes back. Remember, the GSA rates are daily. But if you have reasonable housing expenses that exceed their rate, then you can deduct it. You can claim the meal rate on the GSA as your deduction. So if that meal reimbursement they give is less than the GSA, well, we have a little bit of a deduction we can work with.
Okay.
You cannot do that with the lodging amount.
Okay. So we do not need to keep meal receipts, but we can still deduct it if they don't give us the maximum meals and incidentals. Is that correct?
Right.
Okay.
Right.
But for housing, we have to have proof, obviously, that we went over what they said, and then we conduct it only if we have receipts and proof. Okay.
And remember, sometimes you may have one assignment that's true, but the other 3 assignments it's not. So you have to look at it from a calendar year aggregate.
Interesting.
Yeah.
Okay. Awesome. Let's see. Hey, Sarah. Hey, Chris. Steve, here's a question. This is Steve from OR Nurses. He said, what would be the best thing an agency can do when it comes to doing tax home due diligence? How can we make sure we have a good record of it?
Well, if that's an agency asking the question,
Sounds like
you
it.
may want to call me.
Yeah.
But for the traveler's sake, if an agency is doing this correct, you should get a tax home attestation sheet with every contract where you are required to sign off on the existence or evidence of having a qualifying tax home. That's minimal for an agency. And that tax home statement may have other questions as well too, in regard to whether you're going to spend the money on all those 7 days a week or whatever.
I wonder if there's anyone that can look over those tax forms.
I have
Who could do that?
I don't know. Who else? Somebody else.
You guys can call this guy. He's awesome. He'll look over your forms for you too. That's one of his
Yeah,
services.
well, there's one of them right there.
What?
The little block thing right here.
This right
Just
here?
grab that. No,
Oh.
don't take his hat off. Yeah, so here's who you need to call. Jerry Lewis Telethon going on right now. Call 1-800.
Awesome. Okay. All right. Questions from Facebook. I'm going to make sure we said all this. Fair market value. One thing is keep in your records, just like you keep your contracts. You can keep in your records the local.
Let me jump in. Steve followed up on that.
Oh.
If that's somebody from the agency, tax home statement is just one of those things. We really need to look at your employment agreements that you give out. They can be very incriminating. They get taken up a chain. And then your reimbursement policy, which includes your break and service policy and all that. Now let's get back to the travelers now.
Cool. Awesome. Okay, so these are just other tips. So making sure you're keeping your contracts each time, downloading them, putting them in your own cloud storage, whether that's Evernote or Dropbox. Also, it's good to keep the proof of the fair market value of that time. So when you're looking those up on Craigslist, you can take a picture of that, print that up, keep that with your tax info to show you looked up several on Craigslist. That was the fair market value for a house. Let's talk a little bit about mileage logs. Where do we keep our miles? What should we keep our miles for while we're traveling?
You mean what you should record? Or?
Mm-hmm. Yeah, exactly. So we know we should have a mileage log. What miles are we recording for tax?
Well, you have to get to the assignment. You have to get back from the assignment, or you wind up going to another assignment. That's a minimum. And then, of course, the mileage to and from work, that reasonable miles. And,
Okay.
there's various ways you can do it. You can almost have a calendar and do check boxes, or as long as you have something that is there.
Oh, yeah, awesome. So to and from work, getting from point A to point B,
And
right?
if you do go to our website, my wife designed this nice little receipt envelope, and actually has a little mileage log thingy on the back of it. It can be in any shape or fashion. You can use like a app like Mile IQ or Expensify.
Absolutely.
As
They're
long as
both
you got
great.
something
And
there
what's
for it.
nice about those too, I love that design also, but what's nice about those is it uses your GPS. So you don't have to do the whole push the thing and calculate. I am not detail oriented enough to remember to do that every time. But Mile IQ is what I've used in the past. They ended up being more expensive than some of the other ones, so I don't think I'll use them this year. But I'd heard Expensify is good. Now with my QuickBooks, it has its own mile tracker. But those things on our phones are great because with the GPS, it just automatically will say, watch what we drive. So cool. And then you said also document any trip home during our assignments, right? We can deduct that.
Right, up to what was forfeited by not being at
Only
the
up
assignment.
to what was forfeited, okay.
Yeah, so that $400 flight for a 2-day weekend during your assignment is going to be limited unless you go home to work. Then
So if you go home to work at PRN, you could deduct
Right.
the whole thing.
I mean, the weird thing about it is the IRS, and goes back to a 1950s ruling. If you go home during your assignment, that's a personal expense.
Okay.
But if you go home to work, then there's a business necessity. So
yeah.
as a concession on the personal side, you're allowed to soak up what was forfeited from your deductions with your expenses home, but nothing more.
Okay, cool. That's great to know. We never have to save our grocery or food or
No.
restaurant receipts, guys.
And toss the mileage log, except if you have a rental car where you're allocating. Let me back up.
Okay.
Toss the gas receipts. Keep the mileage log. The only time you keep gas receipts is if you have a rental car, and then you got to divvy that up between personal and business with the mileage log.
Oh.
So sometimes in a rental car, you're wasting your time keeping all those gas receipts. Just, ignore it.
Yeah.
We might need to plug your phone.
I'm going to have you jump on. So we're going to dive right into the Facebook questions.
Why don't you ask me one of the questions? I'll answer it.
And I can go
put
get
the
my thing.
little
Okay.
power cord in the phone.
Okay. We're at 10%. All right. Other questions. So these are our Facebook questions.
Or is this tech moment? How to plug in your phone.
That's right.
Yeah, it's like one of those tech talk.
Tiffany to the rescue.
We have an assistant in the office that's now going to
You're
plug
good. Is it
in
still even on?
the phone.
I think it turned off. We're good. Don't even worry about it.
Yeah, she is plugging it in.
That works.
Seamless. You didn't
Wow,
notice the thing
amazing.
except the little finger that came up on the side. Yeah.
Thanks, girl. Okay, so here's questions from you guys. I previously have met my tax home requirements by visiting home often and making over 1/4 of my taxable income at my tax home.
Mm-hmm.
I just got married now, so now I'm wondering for 2017 if that 1/4 of income includes my spouse's income now to keep a tax home.
No, well, I'll say two things. Each individual's tax home is determined irrespective of the spouse.
Okay.
They stand on their own. Now, if your spouse has a permanent job in one of your assignment locations, that might muddle the waters a little bit, but that doesn't sound like that's what the question is asking. That doesn't really change anything. It's just going to be based on what she or he does.
Okay, perfect. What, if any, healthcare expenses can be deducted? Can you deduct the premiums paid, medication costs?
Okay. First start off, if your health insurance premiums are being deducted from your paycheck, you can't deduct those, because, except in a very rare case, they're already pre-tax.
Okay.
So you wouldn't include those. If you are using a health savings account or flexible spending account, which is fantastic tax saver,
Okay.
and you're using that to pay for your expenses, you've already accounted for those expenses either because it's through your paycheck again, or you have contributed to an HSA and are claiming that someplace else.
Okay.
If you don't have any of that, then yes, you can claim the premiums, you can claim those necessary medication costs, even over-the-counter meds, as long as you have a script that justifies that cost. And you can also use long-term care insurance premiums as well too,
Cool.
which more and more people are beginning to look at.
Awesome. And then now that I have my own insurance, is this something I can claim on my taxes?
Well, it'd be the same rules.
Yeah.
Now, we do have this occasional, in the traveling world, we still see people, they're getting exchange-based policies. They're going to the exchanges and getting premium credits. You can't deduct that which is subsidized. You know, if you pay $500 and you get a premium credit of $400, you can only deduct what's there. And the problem we run into with this is every year you reconcile that premium credit based on your total income. So if you went into that marketplace for insurance and said, I make $30,000, and you got all this credit based on $30,000, and then at the last 2 months you worked all this overtime and you wind up making $40,000, you're going to have to pay back that portion that was given to you because of that $10,000 difference.
I see what you mean. Okay.
Yeah.
The address, here's a different question. The address on my driver's license serves more as a stable mailing address, but it's not the same address as my tax home. Is this going to be a problem come tax time?
Not as if it's in the same area. That's the most important aspect.
The same region? Is that what you mean? So two different...
Yeah, I mean, it just needs to be in the same area of the, say if it's Omaha and it's another address in Omaha, it's the same area.
Okay.
You just don't want it so geographically distant to begin to ask questions.
So as long as it's in the same region, if it's two totally different regions, they probably should change their driver's license to match their tax
or
zone.
change the address. You know, most importantly, you want it in the same state.
Okay. Okay.
And driver's license and all that stuff is important for compact licenses too.
Okay.
And tax returns. Of course, that's another webinar maybe, but if you're obligated to be filing a resident return in a state you have a compact license.
Yeah. How do we work with you? A lot of people wanted to know if they wanted you to file their multi-state taxes this year, how do they go about getting that started?
Well, the easiest way is just go to the website, www.traveltax.com. The office number is 402-379-7818. What we will send you to is there's a workbook right on the website that you download, and it has a checklist of the items that you need to send us, as well as other pages for all this other information we need as well too. Once we have all those, it goes through a data entry process, and then we finish it up with a phone interview, whether it's me or my wife or maybe Tiffany, and we finalize your return, and once we're done, it goes right out to you in a secure portal PDF, waiting for your signature return, and then we electronically file it. I mean, our shop is all seamlessly prepared for the mobile remote professional. Notice nobody walked in the office.
Yeah. True.
We don't have local clientele that walk in and out, just a handful of those, because we're focused on our travelers, our cross-border clients. We don't get a lot of walk-in.
And I think that perfectly goes to the next one. Is it possible for us to use TurboTax or H&R Block or these more generic state tax professionals? Or are our taxes now so complicated that they really need to have them done by someone who really understands multi-state or how much we're an exception to the rules and those type of things?
Well, let's divide this up. H&R Block involves you going, unless you use their online. Let's divide this between online and face-to-face.
Okay.
In the tax prep world, most tax professionals are generally dealing with their surrounding area. You go into an H&R Block, you're going to deal with somebody who, for the most part, say it's in Kansas. They do Kansas returns. They may do one border state return. If you are a new client, you get a new preparer, unless you get an experienced preparer that still has some open slots. My wife used to work at the busiest H&R Block office in the nation in Stamford, Connecticut, and she got newbies. That's all she got. The more experienced preparers might get involved, but for the most part, that's what you get. And that doesn't mean they don't understand what they're doing, because they could have been experienced from another firm that's decided, now I'm going to work at H&R Block or this mom and pop shop or whatever. But this is where it gets a little difficult. When you're used to only doing your state and ones around you, it takes some rampant research time to go to all those other states, pull down that form, trust your software, go through what that software is doing, and be satisfied before you give them the final product. The other problem that we run into a lot with the chains is that they take the textbook definition of a resident.
Okay.
And if you look at the tax booklets, they'll say, well, if you're here 30 days or more, you're a resident. So they then look at every state that you worked in to decide, okay, they're a part-year resident in each state. If you got a compact license, now you're screwed, because you file as a part-year resident in a state where you have a compact license, you can get the license revoked. You could get a letter. And the other thing is, too, if you got a driver's license in that state that's still there, that state's going to expect you to file a resident return. Now you get another letter.
Okay, yeah.
So you have to be careful with their knowledge of the thing you want to ask, do you handle multi-state returns with per diem issues? And, if you find somebody that deals with truckers, they have a knowledge base that's pretty good for this to start with. So
Yeah.
it's their specialty. Tax preparers all have their world.
Yeah.
You know, for us, it's just international and domestic mobile professionals.
Yeah.
That's our world.
Yeah.
That's what we know.
And
So
it
if
is
you
really
give me 5
specialized.
states, I'm going to be done with it in a matter of an hour and a half in terms of having to go through the whole process versus it taking us all day to do it. That's just
Yeah.
what we do.
Yeah, absolutely. And then going on that, so
And then the online. And
Oh yeah,
then
talk
instead
about
of H&R
TurboTax.
Block,
Yeah.
you get it online.
Mm-hmm.
You may run into some of the same problem, not because of the software, but because of the way questions are asked.
Mm-hmm.
One of the most common errors I see in the online material for travelers is that they try to exclude or subtract the income earned in other states from their home state return,
Okay.
or use an address that's current versus use an address that's permanent and legal. It's only as good as the person doing it.
Right. Yeah.
And if you are comfortable with it, fine. TurboTax and the off-the-shelf software become problematic too in that multi-state layering, because it's more designed for people that have W-2s, spouse, house, kids, maybe a side self-employment job.
Yeah.
It's not really designed for all this multiple states stuff.
Yeah. Yeah. That makes sense. Okay. Do I need to file as a non-resident in assignment states away from my tax home?
Anything outside of your home state should be non-resident
Okay.
unless you moved.
Okay. Do I need to file in every single state I worked in?
Yes, unless they don't have an income tax.
If they do not have an income tax, I do not have to file in that state.
Right, because there's no return to file.
Okay. If my home state where my tax home is in a place with no income tax, I still need to file there, right?
Well, if your home state doesn't have a tax, there's nothing to file.
Okay.
But if your home state doesn't have a tax and you work in a state with a tax, you still have to file there.
In that state. Okay.
And remember, you got a license there. When you got that license, all the state revenue agencies will cross-reference licensing rosters
Uh-huh.
to discover potential income.
Yeah. They want to find that.
Whether
income.
you're a nail technician or a nurse or an OT, they're looking at that license. They have the databases connected.
Ah, okay. Okay, cool. And just to clarify, to make sure everyone knows, if you do have a tax home state that does have taxable income, but you don't actually work there that year, do you still file your income tax there?
Yes.
Okay.
Yeah.
Okay. So here's a question from Facebook. My tax home house is paid for. I pay all the utilities, the property taxes on it, and repairs, and my daughter lives in it. How do I show proof if ever audited?
Yeah, and we talked about that earlier.
We
You
did,
have
yeah.
those ongoing expenses. You paid for the mortgage all those other years. I mean, if you're audited, it's paid up. You own it. That really isn't a problem.
Mm-hmm. How do taxes, so you kind of answered this one a little bit, I think, but we'll just ask it just to make sure this person gets clarification. How do taxes work at the end of the year when your state tax is 0, but you pay into all your working states through the year? Do you get credit back since you're essentially paying in extra, or is that money gone for good?
You file a tax return and see if you overpaid. You are subject to their rates on your income. And it may be on total income, even what you earned out of that state, but then they go in, they do a percentage of that.
Yeah.
That's how a lot of them will compute it.
Yeah. Julie on here live says, what is the average cost to use your services for you to do taxes for one of us?
Our fees are on our website, very first page. The average for a traveler is $256 for the federal plus $55 for each state. Now, if you have a business, rental property, and all that, then obviously that's additional forms. And the other part of this, if you go to an H&R Block, they're going to try to push insurance policies on you that they defend you. Well, if we put the return together, you gave us the appropriate information, and you get a letter, you call us, we take care of it.
Awesome.
If you're going to do the return, you got to be able to take care of it. It's just the way I've always been.
Awesome. On my current assignment, I'm not using a car, and I flew here. My company gave me $500 for travel expenses, and I used all of it on my flight here. If I save my subway and bus receipts, can I write off my transportation expenses, or would that technically be covered in the per diem stipend?
Per diems are lodging and meals. They're not transportation.
Okay, so she should keep all of those receipts and then can deduct that on her taxes at the end. Cool. For those of us that carry our own health insurance and pay medical bills.
Well, let me say, for going to work, not for going off someplace to see the
that was good to
boyfriend
say.
or whatever,
Not for your boyfriend.
or planning the wedding. No, there's nothing going on in her life right now. This is illustration purposes only.
It's true. Okay, for those of us that carry our own health insurance and pay medical bills, can we count the monthly premium in the total amount of medical bills?
When we already covered that. If it's through the paycheck, it's already tax-free, pre-tax to begin with. So,
If it's through the paycheck, but if we have our own through the Affordable Care Act, just to clarify.
right, less any premium credits that we got.
Okay. My daughter is in college for Florida. She took out student loans and got a college scholarship. She works part-time to pay for food and gas. I pay her rent, pay for her cell phone, car insurance, and she comes home during breaks. And her license and everything is still at her home address. Can I claim her as a dependent?
If she's in college and she's not over or not 24 or older, then you can claim her regardless, really, as long as you provide half of her support, which obviously it looks like they have, because that absence in college is not considered an absence from home. That's,
Okay.
You're still considered to be living with whomever your guardian is. So yes, they can. And now if they're 24 or older, then if they make more than $4,000 during the year, no. You've got to go back to other rules about providing more than half the support for them. Plus, they can't make more than $4,000. That's when they get 24 or older.
Cool. I have a PRN job in my state of residence. I drive or fly back and forth once a month for a few days to work from wherever my travel assignment is at the time. What can I deduct? Miles, flight cost?
Okay. And let's assume that when they said state of residence, that they also mean where they live.
Have the tax home.
Versus it being some other location within that state.
Okay.
This goes back to that thing about during the assignment, whether you can deduct trips home. If you are going back home to work, and that trip, and let's isolate it to the trip, not everything else. If you are going home to work and you work significantly during that time, then all of these expenses can be deductible. The
Okay.
transportation, lodging, and meals to get there.
Okay. Great.
As long as it's not lavish,
Yeah. Great. If your travel stipend is taxed or not taxed, what all can you take off of taxes? Okay, so if the amount spent is more than the stipend, I'm thinking you can take it all off.
If your travel stipend is taxed, it's income. It's not really
Yeah,
a
our travel
reimbursement.
stipends are not taxed as long as we have a tax home.
Well, there are agencies out there that do give tax stipends.
Oh,
So, for the sake of it, if your stipend is taxed, it's not really a reimbursement. So just toss that out. Then if you can claim that trip, then it's all deductible. If it is not taxed, then you still take those expenses and you also record the reimbursement. So the net is what you can deduct.
okay. So if there's a difference, if they didn't give you as much as you spent,
Right.
you can deduct it.
Because there's a very common practice of taxable car allowances out there too.
Oh,
Yeah.
okay. What vehicle expenses can be written off? Oil changes,
Mileage.
tires,
End of story.
only mileage. Okay.
Just use the standard mileage rate. For you to do the actual expenses, you really got to use your car more like 80-90% for work. And unless you're in home care, that just normally doesn't happen.
Yeah, okay. While on assignment, can you do travel mileage to and from work each day?
Yeah, we already covered that.
We did. Yes. Okay, so those are all the questions from Facebook. If you guys that are on here now have another question, let us know. Other tips that I'll just say real quick that actually were from your website, but I thought were really good ones. So just don't have multiple bank accounts in different states, but it sounds like that is not really like something
and,
that happens
and you
much
won't
anyway.
you don't want that many bank accounts to begin with. It's just duplistic and got more baggage.
Yeah.
Just keep one and be happy with it.
Yep. You're not going to put your assignment address that you're living at on any tax forms or any legal documents. You're always going to use your tax home address.
And don't give it a tendency to brag. You're in New York for 6 months. Don't start putting.
Yeah, some of us love our place. Like I'm a California girl at heart, but that is not my tax home. So even though I would love to have a license that said California, I can't do that yet. So I think that's what you're saying.
Buy a
like,
hat that says Los Angeles.
Yeah, just get one of the sweatshirts.
Wear that. Put it on your Facebook picture. Instagram it.
Yeah. Don't use the words that you're moving or relocating somewhere. You're always just saying you're mobilizing. You're temporarily going somewhere. And then we said this earlier too, keep copies of your current contract in your car. And that's to explain to the police officer that it's a temporary nature on assignment.
Mm-hmm. Somebody's taking a photo of it.
Brenda's taking a picture of us. So, yeah, what do you think? That was pretty good.
Yeah, we talked a long time, didn't we?
We did.
Yeah. What was that, about 2 hours?
I know.
Our staff has been wandering around
They've been
like
so good to us.
like kids waiting on their parents to shut up.
Hurry up. You guys are awesome. Awesome.
Got a whole afternoon off. All I had to do is walk around.
Ashley, you're about to start Travel OT. Welcome to the Travel OT world, girl. That's great. Cool. And then if people want to get a hold of you, obviously traveltax.com.
Yeah.
That's going to have a phone number. You can talk to the girls you met earlier, or Joseph, or his wife, or Sarah. And that's also where you could go to get the workbook and see if you want to work with him with your tax season. And then for me, it's Nomadicare.com, but that would be for if you were looking to get matched with a recruiter that I've interviewed and vetted to get that trusting match in that way.
Recruiter plus traveler equals a happy scene.
Equals Laura.
And also, on our website is free you don't have to be a client. It's free information. It's like Laura said, we wanted to make an impact in the industry.
Yeah.
Because there's so much misinformation out there. That's where it all got started.
Oh my gosh, yeah.
So the information is free. You don't have to be a client. And I even have a blog that has a lot of citations on it. So if you're like, well, where'd you get that? Well, go over to the blog, and there'll be some candid comments in there, because then I don't have to talk with a script.
Yeah.
Like here,
Yeah.
all these pieces of paper. This is what you're going to say.
Yeah. Yeah, it is great. He has a frequently asked questions page that is really thorough. So I would say if you're bopping around the forums, there is a lot of misinformation up. So I would go to Traveltax and try to learn those basics. It's actually incredible how much information is on there for free. So whether you're a recruiter or a traveler, like, go look at that. Go learn this stuff.
And the other thing they need to do is plan on going to the Travelers Conference this September.
Yes, that's true. So if any of you guys have not heard of the Travelers Conference, we're both there every year. We both present every year. We're part of the committee that plans it. It's completely separate from our businesses, but it's there to help educate the travelers in the way the industry works the right way. The first time I went, I had already traveled for a few years, and I was blown away at how much I did not know.
Travelersconference.com.
Yeah.
September
17th,
18th, and 19th at Bally's in Las Vegas in 2017. We had 900 plus travelers and 80 vendors, mostly staffing agencies.
It is so fun.
So take your little checklist down the exhibit hall, or your little question list, and do your contract face to face.
Yeah. And it's so fun. We go out in the nights. There's like the education part. There's the food. There's the happy hours. There's meeting the recruiters. There's meeting other travelers. It is such a good time. Yeah. So yeah, hopefully a lot of you guys come to that this year too. So I think that's all. I think we can stop talking now.
Yeah.
Thank you so much, Joseph. This is fun.
Yeah, good fun to have people come up here. If you're ever in Norfolk, Nebraska, feel free to stop by. We'll entertain you for a little bit.
Awesome. All right, guys. Have a good day. Bye.